Hey guys, one of the questions I get asked most often is how do I know how to anticipate a reversal on the higher time frame trend? So I'm just going to use the weekly 1 hour long on Euro AUD as an example. So if we're being strict according to the rules, I would say the directional bias is long only when the higher time frame, the weekly in this case, has had a body close above the 8 EMA. So from here you'd be looking for the weekly 1 hour long positions each time the weekly opens, and then also if you had a body close under the 8 EMA, you'd be looking for shorts then from this big candle onwards. But sometimes I can tell if you see these 3 blue candles that you'd miss out on, or maybe you'd still be shorting up until the trend ends, and that would have an impact on your win rate. I can tell when potentially these candles are going to be reversing by looking at a lower time frames overbought or oversold level coming back out of the overbought or oversold level more specifically. I'm going to show you that today. I'm going to be putting out a longer video on the TPMN channel that encompasses all the different time frame pair ups. So for the purposes of this video on my channel, I'm just going to be discussing the weekly 1 hour longs. So yeah, what I would do is I would be using the daily time frame, the daily anchor breaks on the overbought or the oversold level to anticipate the weekly candle reversing either bullish or bearish. So let's drop down to the daily and I can show you that. So this is perfect, right? And you want to line it up obviously to the start of whatever the higher time frame is going to be. So obviously the weekly is starting on a Monday. So I'll show you what I mean. For example, the daily is going into the oversold level here on a Monday, right? And Wednesday, Thursday, Friday, Tuesday, Wednesday, Thursday, Friday. Great. And now it's starting to come back up from the oversold level on a Friday, which means from the Monday, I'm going to change the color of this. So from the Monday, lining up to the start of the next week, I'm going to anticipate that this weekly candle is going to close bullish because the daily is coming back out from the oversold level, lining up to the start of this new week. So I'm going to go back to the weekly time frame now. And now you can see, because I've used that daily oversold level coming back, we end up maybe potentially catching weekly 1 hour longs on these 2 candles as well, instead of missing out on this opportunity and only getting these 4 candles. We're also getting these 2 candles as well. So let's just have a look also quickly. Let's have a look on the short side of things just to see how that looks. Oh, we can do it here as well actually, because you saw that there was 1 red candle for that weekly sequence, but we'll just do it here as well. It did touch. It just touched on the Monday. So that's a bit strange, right? So if it's touching on the Monday and then coming off, if I was looking at, and I do look every morning anyway, then you can say, right, well, it's probably going to be a bearish week from then onwards anyhow. But this is perfect, right? So let's have a look. So Wednesday, Thursday, Friday, and then Monday, so maybe Tuesday, right? Also, so intrabar during the week. But let's go back and look at the weekly now. I'm just going to zoom in so you can see it, right? So it's perfect. It's telling you which candle in this bullish sequence might be either a potential losing day if your bias was to have a long position, or that is your candle that is resetting to continue with the trend, right? Maybe stop trading that day, or if you want to be daring, you can counter trend trade. Not suggesting that, just saying. But you can see here as well, you had a bit of consolidation here, or back-to-back body closes on the 8 EMA, which is a bit messy, but then ultimately you were catching the short positions on the weekly 1 hour as well before you had the body close under the 8 EMA if you wanted to also catch these extra candles. Obviously looking at this can be a bit more complicated because you have to wait for those anchor breaks, and sometimes deep anchors on the daily don't break back very easily, so it can be dangerous to wait for that. Like here for example, you can see that it has gone above plus 60, it's overbought, and the whole time it's above, and that's why we call it anchored. I say it's anchored because price is immovable. You do not trade against it. It carries on going in that direction of play. It could have looked like it was breaking back down there, but it didn't. And then it carried on until, again, intrabar, and it only broke down there on the Wednesday, right? And then probably, as you can see, from that point onwards, it's a bearish week. So going back to the weekly again, you can see before we had a body close under the 8 EMA, you were starting to catch the reversal, and that daily anchor break was anticipating a red weekly candle. So that's how I use them. Sometimes if I put a call out in the Discord and I say that, for example, a D15 is going to short into a weekly 1 hour long, I'm looking at the reversals, and also a lower time frame has to pull back for that higher time frame to set up for its position, even if it's with trend. So that's how I'm looking at things. And then you just play the strategy as normal. Once you've got this marked up, then it's just normal weekly 1 hour criteria. So let's drop down to the 1 hour then and have a look. So there's the standard entry criteria for a weekly 1 hour long. So once price is below the weekly open, so I'll just use this one because it's a perfect example, below the weekly open, hitting the oversold -60 level, and then you're getting price closing above the 8 EMA, and swing the low maybe with some extra buffer, and that's it. That's your entry. That was a nice one. No drawdown. Beautiful. This one, it didn't go. Is that under? No, that's not under the open, so you didn't have it. Of course, you can play the shallow pullbacks if you want to. Just know that there is always a chance of a regular divergence that could stop you out. So that one didn't hit. This one, this is where it starts to get messy because we had the daily anchor break, so it's intra-bar as well. So if you want to flip this, the inverse of this, if you did want to be daring and short the pullback of that one red weekly candle, so price above the weekly open and the 1 hour wave hits the overbought level now, which is +60, and then a 1 hour candle body close below the 8 EMA. So because it was intra-bar where the daily broke down on anchor to reverse the weekly candle, the open is actually off of this green marker. Even though it started breaking anchor on the daily only from this point onwards, we have to take this as the open price. So there we go. That would be our short position, and that's London over there trying to stop us out. So just got to be careful of that. That's why I say give it some extra buffer as well. But that would have been your counter trend trade. But just remember, ultimately, it is just a pullback inside the trend, and we're still prioritizing weekly 1 hour longs. So as soon as the 1 hour is getting back to the oversold level, -60, at the start of a new week, you have to then consider going back to the weekly 1 hour longs. And then you can see it's resetting again, and you're starting to get the regular divergence entries. So let's just zoom in here. You maybe had one stop out there, and then you got the regular divergence. So depending on how, because that one was also closing, how generous or tight you are with your stop loss, maybe 1 or 2 stop outs. And before the trade actually ended up going, this one as well, a regular divergence entry, but there was no bullish candle closing above the 8 EMA before the divergence was in. So waiting for the bullish candle closing above the 8 EMA was also the divergence in this case, which ends up making it a lot easier. You don't get stopped out, of course. So that's nice. So nice and clean, that one. So one way to also spot if it is a weekly 1 hour setup is the position of the 4 hour. And this is why I don't go into a lot of detail when breaking down the strategy, because it can get, quite nuanced with a lot of different layers to look at if you want to. But usually a proper weekly 1 hour long will have the 4 hour wave on the opposite side of 0, or it'll be at 0 to re-long. So you can see all of our entries. That one was quite deep, but the proper weekly 1 hour longs, they had a 4 hour wave on the opposite side of 0, or either these very big yellow waves, or it would have been bouncing at 0. If this had come down, for example, to here and then just bounced at 0 and went, it might have also been a legitimate weekly 1 hour long. So that's how the 4 hour would look. The 4 hour would always be either a wave on the opposite side, not necessarily anchored, and then either it would be something like this as well. If this was below the open price at 0, very big yellow wave, that could also be considered. And you can see the same with the inverse, right? For this weekly 1 hour short position, you had the 4 hour wave not anchored, but on the opposite side of 0, and there it is. So that's a neat little trick to spot whether or not there is confluence between all of the time frames for the specific pairing that you're looking at. And that is just the weekly 1 hour breakdown for you guys. I'm going to try and do all the pairings on TPMan's channel with timestamps, so you can prioritize whatever pairing you favor. But just let me know if you have any questions or if that makes more sense to you guys now. Thanks for watching.